Hi, my name is Karen Baer. I'm a financial consultant and I've been in the financial services industry since 1984. In this video, we're going to talk about strategies to get out of debt, rebuild your credit, and ultimately improve your credit rating. In this video, we're going to discuss 3 different stages of financial crisis: going into, in the middle of, and coming out of. So let's discuss the first stage of a financial crisis. It really starts before you realize you're in a financial crisis, and that is because you need to have 3 to 6 months worth of living expenses in a savings account or some sort of a fixed cash account, so that when you have a loss of income for whatever the reason, that you have the money to pay for your living expenses when that loss of income happens. Some signs that you might be headed for a financial crisis are if you are using credit cards, liquidating retirement assets, depleting savings accounts, or liquidating other types of investment accounts to meet your monthly expenses. Let's talk about the next stage of a financial crisis. You know that you're in this stage when you have depleted your savings account, you have liquidated all of your retirement assets, you're behind on your payments, and the creditors have started calling. Some of the consequences you may be facing may include foreclosure, eviction, bankruptcy, loss of credit privileges, repossession of vehicles, and harassing phone calls by creditors. The first thing that we need to do before we get started is to find out where you are financially. And the best way to do that is to order a copy of your credit report, and that is something that you can order for free online. An easy way to calculate what your monthly income is to gather your pay stubs, your Social Security income statements, if you get child support, retirement or investment income statements, and also a tax return can be useful in trying to figure out what your monthly income is. The next thing we need to do is find out what your monthly expenses are. An easy way to do that is to get your checkbook out, or you can get a family budget worksheet, and there are many places that you can get that for free online.
Hello, I'm Robin Pilley, and I'm here today to talk to you about credit. I've been in the mortgage industry 16 years, and I've seen a lot of changes, but I'm here today to talk to you about how to improve your score.
I am trained as an investigator. I'm educated as a lawyer. My vocation was as a consumer protector, and so that all of my investigations led me into finances, into credit, into transactions. Every consumer transaction is a contract, so contracts were read. We talk about consumer rights. It's what I did for 30 years. Since then, though, I retired, and now I am doing this as an avocation. I'm speaking on credit and finances and budgeting.
I'd like to break it down into pieces of pie. Approximately 35%, which is the largest piece of pie, is going to be derived from what is called your payment history. That is how you pay your bills. And it is really the most important thing that you will drive your score with. And when I say it costs certain points, if you make a late payment on a car or a Visa or a mortgage, you will get what we call dings on your credit report, which will cost you points. A mortgage is more important to pay on time than a small $20 Visa. You will get penalized more points for a late payment on an auto or a mortgage than you would on a Visa. But payment history is 35% of that piece of pie, of which we will equal 100%.
Your credit score is created from your credit report. Your credit report is a log of how you use credit. It's made up of people that give you credit that then report it to three companies. You go to annualcreditreport.com to get your free credit report. That's a site that was set up through an agreement between the Federal Trade Commission and the three reporting companies, Experian, Equifax, and TransUnion. You are entitled to one free report each year from each company. So whether you get them all at the same time or whether you get one at a time every 4 months, it's up to you. But you want to do it because we have discovered, and most of the statistics show, that about 79% of all credit reports have errors in it. And it is the errors that cause credit scores to be lower than they should be, particularly if you have somebody's account on your report that's a no pay or a late pay. That's going to bring your credit score down. So you need to dispute those things with the credit reporting company directly. You write them a letter, you send it to them, they have a time frame within which they need to get back to you with an answer. You want it off your report if it's not yours. You only want what's yours on your report, that way you get an accurate score. Your score will be affected about 60 days after you make your disputes and get the information off of your report.
The next piece of the pie that I'd like to talk about today is going to be credit balances, and this also is a very large portion of where you will be obtaining your credit score. This piece of pie is 30%, so again, it's very, very important that your credit balances remain low. If you have a Visa with a $10,000 allotment, you do not want to have $10,000 on that credit card. The balance, if you're at $1,000 or $2,000, is an awesome amount and would give you a great credit score. If you are at $5,000 or above, you will get decreased credit score. If you're at $9,000 to $10,000, the more you have, loan to value on that allotment of that Visa will drastically cost a lot of points on your credit scoring if you've got maxed out credit cards. So you want to keep the credit card balances below 50% in order to obtain the highest possible score.
If you are in debt and you have collection agencies calling you, whether they're first party, meaning the bank itself, or whether they are third party companies that have bought the debt or have contracted with the bank to collect the debt, you need to do one thing, and that is check that it's your debt. If it's not your debt, you need to dispute it. If they call you, you need to ask for a copy of the documentation showing the debt. If they send it to you in the mail, you have to dispute the debt by letter and ask them for a copy of the documentation. If it's not your debt, don't pay it. It may be your debt though, and then you don't want them to harass you. You want to, if you can't make arrangements to pay it right now, you need to give them some information that you may be able to pay it in the future. If you can't pay it, you don't want them calling you time and time again. So there are laws that protect you, either through your state licensing of collection agencies or through the federal government, which has its own act regarding collections. You can write them a letter and tell them not to call you at work. They can't talk to your neighbors. You can ask them not to call at home. If they call, they have to call between 8 a.m. and 9 p.m. If you have a problem, go to your state government, either your collection agency licensing board or your consumer protection division. They'll be happy to take it from there and help you out.
The next piece of pie is your history, and this one is 15%. And what I mean by your history is what we call seasoning on the accounts. Now, a young person, it's very difficult to have a high credit score because you haven't had accounts for a lengthy period of time. Someone in their 50s or 60s that might have had an account for 20 or 30 years is going to have a good score just because of the seasoning of the accounts. The other thing with history, a lot of people when they apply for credit, they want to pay off credit cards and close them. May I caution you not to do that? The older the account is, the better that is helping your credit score because of history and seasoning. So the older it is and the more timely that you pay it, the better your credit score. If you open too many new accounts, if you open 2 or 3 Visa's accounts and then you get a new car, that actually will hurt you because you have many accounts that are too new, too fresh, and that is called a risk factor, and your score will decline due to that. So if you decide to open new credit card accounts, always remember to keep the amount of them low.
Credit scores are an unusual and changing marketplace because it used to be that we'd tell people very different things than we do now. Now, for your credit score, you want to leave your credit cards open. You want to pay the minimum rather than not pay at all, if possible. You want to make sure that if you use credit, you use it within 25% of your total limit. And that's for all the credit that you own, not just the one credit card. So that if you have 5 cards at $4,000 each, you want to use $2,500 worth of credit because that gives you a good score. If you go above 30, then you're going to be getting a detrimental score. If all of a sudden they start getting inquiries outside of a 14-day period, they get nervous about that number of inquiries. If you're going to buy a new car, and as a good consumer, you want to go shop credit, you want to do it within a 2-week period because then it only counts as 1 inquiry. And so if you put those things together, they are not intuitive because you would think you'd want to close credit, you would think you'd want to lower your credit limit, you would think you'd want to do a lot of things. It's not what you want to do. If the bank calls you and says, we want to increase your credit limit, say thank you very much. It gives you a higher 25% that you can use as long as you use it rationally and you're ready to pay it off at the end of the month.
The next piece of pie, which contributes 10% to your score, is the type of credit. And what I mean by type of credit is whether it's an auto loan, a mortgage payment, a home equity line, or revolving credit accounts. Revolving credit accounts mean credit cards or store credit cards. The best way to get the best credit score is to have a mix of all these items. You don't want to have too many mortgages, too many car payments, or too many credit cards. A mix of all 3 is best, and the experts do say no more than 3 to 5 revolving credit cards are actually best for the best score. So mix is the best thing for 10% of the piece of pie. The last thing I'm going to talk to you about to equal that 100% for the piece of pie is inquiries. An inquiry is when a creditor pulls your credit report and it actually costs 1 or 2 dings to your credit score. And what I mean by dings is points. So it's not like that is a lot if 2 or 3 points are lost due to an inquiry. However, if you go out and apply at 6 or 7 different places for a revolving credit card, it will eventually take 10, 20, 30 points away from your credit score.
The economy that we have today didn't just happen. People need to get ready for if there is a furlough or if they get laid off or if the job simply disappears. And they have to look at their current lifestyle in order to do so. They have to establish what is a need and what is a want, and they have to get rid of the wants and focus on the needs as they set up an emergency fund and some kind of other cash savings account, as well as paying off the credit cards. So that they need to find the savings first by establishing a spending plan. Then they need to allocate those savings to paying down their debt, establishing emergency funds so that when something happens in the future they don't need to use the credit card, and then finally a savings plan so that if they get laid off they've got some long-term money to fall back on.
All right, let's talk about budgeting. What is a budget? A budget is a report of all your income and your expenses. When your monthly expenses exceed your monthly income, this is when you set yourself up for a financial crisis. There are many ways that you can go about creating a budget. You can use pencil and paper, an Excel spreadsheet, or use one of the many applications available online free of charge. But whatever you choose, it needs to be something that you're comfortable with so that you will continue to do it. Once you've decided on the budgeting tool that works best for you, this is where we're going to input all the data that you've gathered with your monthly income and your monthly expenses. Now that we have a good idea of what your monthly budget is, we need to take a look at where you are in your overall debt. So we need to make a list of all the debt that you have, and you can do this by collecting monthly statements for payments that you make on credit cards, on auto loans, student loans, and any other type of debt that you make monthly payments on. And I would suggest whether you do it on pencil and paper, or you do an Excel spreadsheet, whatever method works best for you, but you need to make a list of all the debt, the amount that you owe, the minimum monthly payment, and also the interest rate that you're being charged on that debt.
Now then, if you are in the situation where you've been laid off or the job has disappeared or you're on furlough, you have to take a look at what bills are essential to be paid, which bills can be put aside, and which bills you need to forget about just for the moment and address at a later date, because you have a finite amount of money in your emergency fund and in your savings plan, and at the same time we hope that you're looking for another job if you need one. So what you need to do is look at those bills that have things attached to them. Your house, your car, your utilities. You don't want your electric and gas shut off. You don't want your car repossessed. The one thing that will put most individuals into a serious financial problem is having the car repossessed. And finally, you don't want your house foreclosed. So those are prominent, and anything else that has goods attached to them that can be repossessed are things that you have to look at. But if you've got the boat, maybe it's time to give it up rather than to keep it at this point. The next set is medical bills and hospital bills and student loans. Of those, student loans need to be paid because the federal government will take it out of your income tax return if you don't. And they have a whole set of special laws that attach to student loans that are federally backed. With credit cards and medical bills, though, these are unsecured credit. They need to go to court to get a judgment to actually garnish wages if you have any, and so that they would be the ones that I would either pay the minimum on or set aside to when you have more cash flow coming in, so that you make sure you keep your house, your electric and gas, and the car intact over this period of time.
Now we're going to go over a budget worksheet that I found online. There are two different worksheets you can choose from: basic spending plan and an extended spending plan. I chose the extended spending plan. I've assumed a single mom with one child. We have a monthly take-home pay of $5,000. For savings, I have $500 going into a retirement fund. For housing expenses, we have assumed $1,500 for rent or mortgage. I haven't put anything in the property tax and insurance, assuming that if it's a mortgage, it was included in the mortgage payment. If it's rent, then it's not the responsibility of the tenant. Gas and electricity at $175. Telephones or cell phones at $125. Water, sewer, and garbage at $50 a month. Maintenance, repair, and tools. You're probably not going to have maintenance expenses every month, but it's good to budget for that. So we have $10 a month in here. Again, cleaning and yard care, you're not going to have that in the winter months or the months that the grass is not growing, but if you budget for it and you have a savings account, that's a good idea. So we've got $10. Furniture and appliances, again, not something you're going to spend $15 a month on, but if you have an appliance that breaks down, or you have a piece of furniture that breaks, or you want to buy a new one, if you budget for that, then you'll have it in your savings. For food, we have $400 a month for groceries and supplies for the house. Meals, eating out, we have $250 a month. For clothing, $200 a month, and this, would depend on the type of job that you have. If you're working in an office and you have to have suits, you're probably going to spend that. If you're working outside and, lawn care, you probably will not be spending that. Laundry, dry cleaning, repair, the same thing. If you work in a professional office and you have dry cleaning bills, then obviously you're going to have something there. Transportation, we have a $400 vehicle payment. Gas and oils, this can vary from person to person depending on how far you drive for your job. Also, it will depend on what type of vehicle you have. If you have a SUV, you're going to spend more on gas than if you have an economy car. Auto repairs, again, there's a big difference between repairing a Mercedes or repairing a Ford Escort, so that can vary greatly depending on the type of vehicle you drive. Again, the auto insurance is going to depend on how old your car is, the type of car it is, where you live. There's a lot of different considerations when getting insurance. It's going to depend on what your deductibles are, what your coverages are. We have $100 in here for auto insurance. Debt payments. We have $350 for credit cards, $100 for any other type of loan if you have a student loan, if you have a home equity line of credit. Taxes and Social Security. I didn't put anything in here for income tax or Social Security because I assumed that the $5,000 was take-home pay and all of that was already withheld from your paycheck. Life and health. We have $35 for doctors and dentists. Again, you're probably not going to visit the doctor or dentist on a monthly basis, but if you budget for that and you have it in the savings account, that will prevent you from using your credit card when that does come up. The same thing for drugs and prescriptions. Health insurance, $250 a month. Life insurance, $100 a month. And again, that can vary depending on the type of life insurance policy you have, the term of the life insurance policy. For personal, for toiletries and haircuts, I have $60 a month. Postage, $5. Contributions, there's church donations and charitable contributions. I have $500 a month for church donations, and that's based on the 10% tithing on the $5,000 of income. Charitable contributions, if you belong to any community or civic organizations and you make donations to that organization. Gifts, we have gifts. This includes everything: birthday, anniversary, Christmas, whatever occasions come up during the year. We have $50 a month. Cards and wrapping paper, $15. Other, $10. Personal improvement, we have tuition at $50 a month, books at $15, magazines, newspapers at $25, lessons. This could be recreational lessons such as horseback riding, sailing, yoga. Equipment and computers, I have at $50. That's $600 a year, and if you figure you buy a new computer every 2 years, that gives you $1,200, but that also includes printers, faxes, and other equipment, software that you may need. Other, I have $5. That's to cover supplies for your equipment. Work, we have professional or work dues. I have $20 a month, and I belong to a networking group, and we pay $200 a year for membership. So if you have some sort of organization that you belong to and you pay dues, that's where we would put that. Other gifts and donations, I have $5. Childcare, big expense, I have $800. Recreation. Hobbies, we have at $25. If you play golf, you're probably thinking, no way. There are probably other hobbies you can do for $25 a month. Pets, we have $100 a month. That includes food and vet bills. Movies, we have at $10. Cable TV and satellite at $125. Internet at $40. Camera, film, and developing, I didn't put anything in there because everybody's using digital cameras now. Club memberships, we have at $59. Vacation and expenses, $100 a month. Babysitting fees, $50 a month. Miscellaneous, we have $20 a month for allowance and $100 a month for mad money. This would be money, just cash in your pocket for miscellaneous expenses. Now, if we hit the calculate button, you will see at the bottom, it shows your total monthly income at $5,000. Our total monthly expenses at $7,194. So we have gone over our budget by $2,194. Now that we've created our budget and we found that we're $2,194 over budget, we need to go back and make some adjustments. So I have reduced our savings from $500 to $175. And I want to leave something going into savings for retirement. And I wanted to make sure that you take full advantage of your company match. So if you have a company match, typically they match 3% of your pay. So you'll notice that on our new budget worksheet or our revised worksheet, we have 3.5% going in for a retirement fund. For your rent or your mortgage, I've left that at $1,500. Typically that's not negotiable. If you are renting and your lease is coming up for renewal, you may just ask the landlord if they can reduce that by $100, $50, whatever the amount is. The only thing they can say is no, and it's worth a try. The other thing is maybe consider taking in a roommate. If it's your own home and you're paying the mortgage on it, you might be able to take a roommate and cut that dramatically. Gas and electricity. I've assumed that we have gone through and turned our water heater down and made some other changes in the house to reduce that electric bill on a monthly basis. So I've reduced it down to $140 a month. The telephones and cell phones. I assumed that you had a landline and a cell phone, and I've eliminated the landline. So I've reduced that to $70 a month. Water, sewer, and garbage, I've left that at $50. Maintenance, repair, and tools, I've left that the same. Cleaning and yard care is the same. Furniture and appliances are the same. For food, I've reduced that from $400 a month to $350, assuming that we're going to clip coupons. You can also get coupons offline. There are a lot of them available. Eating out, I've reduced that from $250 to $100. If we absolutely had to, we could reduce that altogether to $0. Clothing, another big reduction from $200 a month to $75 a month. I think this is easily done by shopping at the consignment shops or shopping when things are on sale and using the coupons that come out in the paper or in the mail. Dry cleaning and laundry, I've reduced that by $25, assuming that we wear our suits, more than once. Vehicle payments, you can't do anything about that till they're paid off, but I've left that at $400. Gas and oil, I've reduced by $25 a month. And we're doing that by making a list of errands that we need to run and trying to do as many things as we can when we do leave the house so that we're not running back and forth several times a week. Pick a day of the week that you can run errands and get all your errands run, the banking, the grocery, the post office, library, things like that. Auto repairs, I've left that at $50. Auto insurance, I've reduced that by $25 a month, assuming that we increase our deductibles. You may talk to your agent to see if there's other ways that you can reduce that premium payment. Credit cards and loan, I've left those payments the same. We will go into more detail about those later on in the video. Taxes and Social Security, again, we've assumed that your monthly income is after those are taken out, so we're not going to take those into consideration. Doctor and dentist, I've left at $35. Drugs and prescriptions, I've left at $20. Health insurance, I've reduced that by $50 a month, again, assuming that you can ask for a higher deductible to reduce that premium, or even just shop your insurance to find out if you're getting the best rate possible. Life insurance, the same thing. I've reduced it by $25 a month. Shopping that life insurance policy, whether you're reducing the death benefit or the term on the policy, meaning the length of time that the policy is good for. Moving on to personal expenses, I've reduced toiletries and haircuts from $60 a month to $25 a month. Postage, I've taken that out altogether, assuming we can pay things online or we can actually pay them in person when we're at the store or at the bank paying loan payments. Church donations, I've reduced from $500 to $200 a month. And I've totally eliminated the charitable contributions to civic organizations or other groups like that. Gifts, we've reduced from $50 a month to $20. Cards and wrapping paper, again, we've reduced that to $5. Personal improvement, I've reduced tuition to $0. While we're working on the budget and trying to get it in line, we're going to give that up. Books and magazines and newspapers, I've totally eliminated those expenses. Those are all things you can get online or at your local library. Lessons, I've taken that out. You can check with the local Parks and Rec or civic organizations to see if they might have free lessons available. Equipment and computer, I've reduced that to $25 a month from $50. Other, I've left that at $5. That's for your computer supplies, software, hardware, things like that. Work expenses, professional dues, I've reduced that to $0. Ask your employer if they can pay those fees for you. Other gifts and donations, again, until the budget is in line, we're going to give that up. Child care, we've gone from $800 a month to $500 a month. I did this by moving my child from a private nanny and home to a daycare center. And also with child care expenses, if you have a licensed child care provider, those are tax deductible dollars. Recreation, we've got cutbacks here. We've eliminated hobbies. Again, we can find free things to do outside, whether it's playing catch with our kids, throwing frisbees, going for walks. But we're going to give that up until we have our budget in line. Pets, we've reduced that by $25 a month, assuming that we're buying off-brand name pet food. The movies, we've gotten rid of that expense. We're going to go to the library and get free movies at the library. Cable TV and satellite, we've eliminated that. We're going to cancel that service until we have our budget more in line. Internet, I've left that at $40. Club memberships at the gym, we're going to stop that for now. Vacations, we've reduced it from $100 a month to $25 a month, assuming instead of taking a week-long vacation at the beach that we're going to take day trips instead. Babysitting fees, I've reduced that by 50% to $25 a month. If you have family or friends that have children, you can share the babysitting, alternate your babysitting days. That's a good way to cut back your expenses there. Miscellaneous, we have eliminated allowances. We're going to teach the children the value of $1. They're going to have to go to the neighbors to cut the grass or rake the leaves or do odd chores for the senior neighbors that we live by. And MAD money, we have reduced that by 50% to $50 a month instead of $100. So we're going to pack our lunch, we're going to have our coffee at home, we're going to take a can of soda or a bottle of water instead of stopping and buying those things during the day. And once we recalculate all this, we find that our budget has a $5 positive cash flow instead of the negative $2,194 that we originally started with when we worked on the budget the first time. If you need to reduce your expenses even further, you can consider canceling your internet service and checking with your local library to see if they have free internet access. Now that you've completed your budget, let's look at some ways that you can cut back on that monthly budget and use that money towards savings or paying off some credit card debt. We'll give you 3 examples. The first is your cable or satellite bill. Let's say that you subscribe to the full package. Consider cutting it back to the basic, and let's say that you save $25 a month in doing so. If we take $25 a month times 12 months a year, that is a $300 savings. The next example is the gourmet coffee. If you are one to stop every morning on the way to work and buy a $4 gourmet coffee, you're spending $20 a week or $80 a month. And by cutting out that 1 cup of coffee a day, you can save $960 a year. Let's say that you buy lunch out Monday through Friday and you spend $10 a day on your lunches. That would be $50 a week or $200 a month. And if you total that up, that's $2,400 a year you could save if you pack your lunch and take it to work every day. Now let's add up what our savings are just by cutting back on those 3 areas. We have $300 for the cutback in cable by going to basic. We have $960 by giving up that 1 cup of coffee a day. And we have $2,400 by packing your lunch every day for a total savings of $3,660 for that year just by cutting back in those 3 areas.
A spending plan is where everybody should start. You look at 1 month's period of time, you establish how much money is coming in from jobs and other sources, but then you also write down all of the money that you spend. You write down the gourmet coffee and donuts in the morning, you write down your entertainment, and then you also include all of those fixed bills that you have to see whether you're living within your means or outside of them, and then using the credit card to extend your budget. You don't want to do that. You want to cut down on the use of credit because it's so expensive in this economy. So you find where you can save money. If you need to do big things, you look at cable and telephone. If you need to do small things, you look at the gourmet coffee and donuts.
It's important to take a look at the interest that you're paying on your debt, because you want to concentrate on the debt that has the highest interest rate and work your way down that list and pay off the lowest interest rate debt last. And you also want to take a look at credit card transfers. If you can find a credit card that offers a lower interest rate or even a 0% interest rate, that is in your best interest to do so. It will help you get the debt paid off sooner.
If you have established how you're going to do your spending while you are laid off or not working, and credit cards are not part of that payoff, if you're not paying off if you're not even paying the minimums, it's probably a good idea to try and contact the bank that the card is associated with or the company that the card's associated with, and let them know that you're going to need some kind of grace period, or see if you can work out something with them to avoid some of the fees and the interest charges that are going to be associated with not paying them off.
Now that you've completed your budget, let's take a look at it and make a list of the necessities and the wants. A necessity would be mortgage or rent, phone, utilities, car payments, insurances, and that could be different things to different people. Life insurance, long-term care, health insurance, auto, and so on. And don't forget groceries as a necessity. Let's work on the want list. A want list could include entertainment, eating out, wardrobe, private school for the children, recreation vehicles such as boats, jet skis, motorhomes, vacations, vacation homes, gym memberships, and salon visits. If you're fortunate enough to have a long list of wants on your budget worksheet, you've got a lot of areas where you can save money and cut back. And by cutting back in these areas, you can save a substantial amount of money throughout the year. We've talked about creating your budget, we've gone back through and we've adjusted the budget to meet our monthly income. But another way that we can adjust the budget is to increase our monthly income. And you can do this a number of ways. You can start a part-time business, whether it be out of the home or in the home using your existing skills. You can talk with your boss about a pay increase if you're competent in your job and you're comfortable doing so. You can also go through your home and clean out the clutter. You'd be surprised at how much stuff you may have in your home that you're not using or you don't want anymore. You can put these in consignment shops, you can list them on eBay, or even have a yard sale.
If you are employed and you need counseling to help you get out of debt, there are 3 options that you have available to you. One is the nonprofit. The most famous of those is the Consumer Credit Counseling Services. They are generally free to the consumer. They do get money from the companies that they work with that they are helping you pay off. They help you if you have a job because then you have regular income coming in. They can consolidate all of your payments into one payment and help you get out of debt. There then are for-profits. The for-profits, you need to check with your state to make sure that they are licensed within the state that you're living in, because you want to make sure that you use somebody in your state boundaries. That way when you send money, if something goes wrong, you don't have a problem going to get that money back. If you go across state lines, it becomes much more complicated. Finally, there are credit settlement companies. And credit settlement companies are companies that have upfront fees. They are going to collect money from you for a period of time, up to 3 or 4 years before they pay anything off. They are going to negotiate your debts for you. There is no guarantee that I'm aware of that they're actually going to make any savings for you. So that they are something that you should use after you do research. And I would actually put the name of the company in my favorite browser with the word complaints behind it and Google them to see what kind of information you obtain.
Let's talk about your credit card debt. First thing you want to do is check to see if you're paying any annual fees on your credit cards. If you are, you need to call the credit card companies and ask them to eliminate that payment. If they will not, you need to check other credit card companies and find a credit card company that you're not paying an annual fee to. Also, you need to see if you can find a credit card company that offers a 0% interest rate. And if you find one that you can use, consider transferring higher interest rate cards to that company. But you need to keep in mind that they're only going to offer that 0% for a set amount of time. So before you make any transfer, you need to find out what the interest rate will be after that offer period is over. And let's say that you have an 18% interest credit card now, and the 0% interest rate credit card will go to 22% when that introductory period is over. Only transfer what you'll be able to pay off during that 0% interest rate period. Let's talk about strategies for paying off your credit card debt. Typically, you want to pay off your highest interest rate card first. However, if you have a smaller balance on a credit card, it might be best to pay this off first for two reasons. You get a sense of accomplishment for paying a debt off, and the other, you can take that monthly payment and apply it to your highest interest rate card. Let's take a look at your credit card debt and how making minimum payments can prolong your payment period as well as your interest. I have entered our credit card information into this free online calculator. I've entered all the credit cards, our balance that we owe, our minimum payments, and also the interest rates. Let's take a look at the information that we've entered. We've got 4 credit cards with a total debt of $13,850. I've listed these credit cards with the highest interest rate on top, working our way down. If we make our minimum payments, it will take us 5 years and 10 months to pay it off, and we will have paid $22,825 for that debt, with $8,975 being in interest. Extra payments on credit card can greatly reduce the amount of time and interest that you pay. I have put in here that we received a tax refund for $600 and we've applied that to our debt. And I've also put in here that we've received an increase in pay and that we've also got some extra income from other activity, whether it was a second job or having that yard sale that we talked about. Let's take a look at what the extra payments have done to our credit card debt. The extra $100 a month of income we're earning have been applied to the highest interest rate credit card, which was our Visa. So instead of our $125 minimum payment, we're now paying $225. And if we look at the June payment, it took that $600 tax refund that we applied to our debt and it added it to the Visa because that is our highest interest rate debt that we have. As you pay off the credit card debt, you're going to take the monthly payment from the debt you've just paid off and you're going to apply it to the next highest credit card debt. So you will see the monthly payments increasing on your next debt, which in this case is our MasterCard. And we just keep rolling that extra payment. So your payments will stay constant until the debt is paid off. You're just transferring what debt you're paying it on. So when one pays off, you're going to add that to that next payment and so on and so forth. Let's take a look at what those additional payments have done for us. We made the one additional payment of $600 from our tax refund and additional $100 a month from extra income that we're earning now. And instead of 5 years and 10 months for a payoff, we've gone to 3 years and 5 months. And instead of $22,825, our total debt now is $18,861 is what we have repaid. And that is a savings of almost $4,000 in interest payments that we saved by making those additional payments.
If you're looking for things to help you either get out of debt or come up with spending plans, forms, letters, those kinds of things, you don't need to pay for any of them. They're all free out on the internet. If you go to powerpay.org, it's going to be a site that will help you calculate how to get out of debt. If you go to eextension.gov and click on personal finance, you'll come up with all of the samples, the forms that the cooperative extension agents of the Department of Agriculture use when they do financial counseling. So that all of that stuff is on the web. You just have to find it. You shouldn't be paying for it. If you think you want to pay for it, think what other purposes you can put that money to and use the free form.
We'd also like to discuss with you today what it means when you have a collection, a judgment, or a bankruptcy. Most lenders have rules on the date of discharge and when you can acquire a mortgage payment. On bankruptcies or foreclosures or short sales, most lenders, government lenders, are going to want 2 years from the date of discharge, not file, but discharge. Conventional financing does require 4 years from the date of discharge. Collections, repossessions, or anything that negatively affects your credit and could affect you being able to purchase a home, acquire a credit card, or purchase an auto. All of these things are important, and most people want to run out and pay them. Let me caution you here that it may not be necessary for you to pay off the collections. If it is a large collection, you want to talk with your lender and find out if it's necessary to be paid. If they are medical, they're small, and they're under $500, in most cases, the lender will not require you to pay them off. So let me caution you again not to pay them until you speak to a lender. If the account is 4 to 5 years old and you pay it in the current year, what will happen is it will come up as a new debt and redate itself, and then it causes the credit score to go down. So do be cautious in paying off any collections without the guidance of a lender.
Let's talk about rebuilding your credit. Rebuilding your credit really starts when you make the decision to get out of debt. You need to make sure that you pay your creditors on time. If you don't have a credit card that is still active, you need to check with your local bank about getting a secured card. And all that is a deposit of some cash, whether it be $250, $500, whatever the amount is. The bank puts that into an account and they freeze it. You do not have access to that money while the credit card is issued. The credit card works the same way as a regular credit card. You make your charges and you make your monthly payments.
Although most landlords are not with a management company that will report to a credit bureau, it is very important that you pay them on time, since the lender does want your rental or mortgage history. So again, although the landlords may not report to the bureau, your evidence of current housing payments made on time is ultimately very important. Other lenders that don't report may be your mobile phone, your car insurance. There's certain things that you pay that are not reported to the bureau. So if anything needs to slip and make a late payment, it would be those things that are not reported to the credit bureau, and the people that report, such as revolving credit cards, the auto, and your mortgage, must be paid on time to keep your great credit rating.
Once you've been responsible about making your payments and you can obtain a conventional credit card from one of the issuing banks, you can go back to the bank and request that your secure deposit be rolled to a savings account and start using your conventional credit card.
On acquiring that secured or any new credit card, my suggestion for you is always to make small, easy charges that you can pay off at the end of the month. That way, when the credit bureau is reporting, they will show the account as a current account because you are using it, but then the balance reflected is very low. So that is the best way to obtain and start building your credit score.
I hope you've enjoyed this video and found it both useful and beneficial, and I wish you the best as you work towards your new financial goals.